Well, good morning, Jagender Rana here. Topic for our discussion today is frauds in insurance. Frauds in insurance. Good performance of an insurance company determines the position and the growth of the insurance company in its market. Profitability and prudence are the most important objectives of the financial management and an important measure to determine the overall performance of an insurance company. Every insurance company is most concerned with their profitability. So profitability and prudence measures are important to the primary owners as well as to other stakeholders including company managers. Since the insurance companies have outside investors putting in their money into the company, it is imperative for the primary owner to manage business performance to deliver and show profitability. Business leakage impacts profitability big time. While there are many types of business leakage, in this discussion, we will focus on the leakage due to insurance fraud and abuse. As per the Insurance Fraud Monitoring Framework issued by Insurance Regulatory and Development Authority of India, financial fraud poses a serious risk to all segments of the financial sector. Fraud in insurance reduces consumers and shareholders' confidence and can affect the reputation of individual insurers and the insurance sector as a whole. It also has the potential to impact economic stability. Now, what is an insurance fraud? Important to understand. Because fraud in insurance defined as an act or omission intended to gain dishonest or unlawful advantage for a party committing the fraud or for other related parties. So this may, for example, be achieved by means of misappropriating assets, deliberately misrepresenting, concealing, suppressing, or not disclosing one or more material facts relevant to the financial decision, transaction or perception of the insurer's status, abusing responsibility or position of trust or a fiduciary relationship. Fraud affects every type of insurance, whether it is non-life insurance, life or health insurance. Insurance fraud may be committed by policyholder or by a third party claiming against an insurance policy. It can range from providing untruthful or incomplete information in applications submitting a claim for a loss based on misleading or untruthful circumstances, exaggerating a genuine claim, and misleading being untruthful in dealing with an insurer with the intention of gaining a benefit under the insurance contract. Similarly, an abuse can be defined as a practice that is inconsistent with the business ethics, which results in unnecessary cost to claims and in turn to the company and is illegal. So, for example, hospitals charging fees from insurance companies for procedures and diagnostics which are not required. So with the exponential growth in the insurance industry, the industry is also witnessing an increase in the number of frauds and abuse in the business. The detected and undetected frauds are estimated to represent up to 10 to 20% of all claim expenditures. This significant role fraud and abuse plays in negatively affecting the insurance sector are often underreported or discounted. So since the advent of privatization in the life, health and non-life industry, the number of incidents of fraud and abuse have been observed, noticed, traced and proved. But still, in large number of incidences, the fraudsters go scot-free. due to non-availability of credible documentary evidence which can stand in the court of law and the indecisiveness or hesitancy of the companies to file police complaints against the protesters or abusers. So the worst hit policies are motor, own damage, theft and third party. Employers' liability, personal accident, fire, marine, etc. in the non-life industry and in the life and health industry, fraud and abuse is rampantly observed, noticed in claims related to death, hospitalization and accidents. It has been observed that the fraudsters follow a pattern in the incidences of fraud and abuse, and it is not restricted to certain areas but is spread across the country. So the fraudsters are well equipped and abreast with the terms and conditions of the various policies, rights and the insured latest trends in the insurance industry, investigative measures adopted by the insurance companies, limitations and constants of the insurance companies, action taken by the insurance companies in fraudulent claims, court proceedings and formalities, etc. So the fraudsters are well informed about the entire insurance value chain and are in continuous lookout for the potential weaknesses. The moment they are able to identify the weakest link to the strategies and attack, for example, as the sales force is not vigilant and does not act as primary underwriters, the fraudsters are going to target the sales force to achieve their plan to deceive the insurance companies. In many cases, it is observed and found that the fraudsters are supported and guided by the consultant who, unfortunately, would be someone from the insurance industry, either a person from the sales team or an agent or an ex-employee or a surveyor or an investigator working for some insurance companies or someone who has worked or had been related known to them or an advocate. These consultants aid in preparation of documents and creating situations fertile for putting up a fictitious and a fraudulent claim with the concerned insurance company. For example, in health insurance, unfortunately, it is observed that the treating doctor or family doctor or the hospital or nursing home is fully aware of the condition of the health of the insured person, but they would aid in preparing hospitalization related fictitious documents for submission to the concerned insurance company in connivance with the insured and the consultant. But there are also instances wherein the fraudsters are the people who were ex-investigators. So what is the cost of fraud? Insurance fraud seems on the surface like a crime that doesn't really hurt anyone. A few extra rupees squeezed out of an insurance company doesn't seem like it would make much of an impact on a large and successful company. Our fraud impacts on an organization financially, operationally, and physiologically. While the monetary loss due to fraud is significant, yet in real terms it is still the tip of the iceberg. So the hidden loss that accompanies due to frauds is worth introspecting and includes loss of reputation, brand image, goodwill, customer relations, opting out of insurers, etc. Other visible loss due to insurance fraud comprises of increased premium income to customers, financial loss to company, high reinsurance cost and the litigation cost. The invisible loss due to insurance fraud would include things like productivity loss, long claim settlement cycle, lost sales, negative claim experience, loss of customer loyalty, low employee morale, high employee attrition, and high cost of underwriting and process management. Both the visible and invisible loss can lead to competitive disadvantage for the insurance company. So what can insurance companies to do combat fraud and abuse? Fraud and abuse risk in insurance is complex in itself. Add to the sophistication of fraudsters and it becomes all the more difficult for organizations to detect and control fraud in time. So fraud and abuse can be perpetrated by any employee within an organization or by those outside it. And hence it is important for companies to have an effective fraud management program in place to safeguard their assets and reputation. So to address fraud and abuse, we suggest a four-step framework to building successfully fraud management program. This is culture building, building organization capacity and data-centric culture, advanced analytics and predictive modeling. The first step is to build a zero tolerance culture. This could be initiated by institutionalizing a foolproof zero tolerance fraud and abuse control policy. So the policy should be promoted within the organization so as to develop a vibrant, non-tolerant culture towards fraud and abuse with active participation and involvement of all the stakeholders, with all the employees irrespective of their functions, job profile, locations, etc., including surveyors and brokers, agents associated with them and all their vendors including their TPS conducting the pre-insurance medical test and claims and investigations. So, as market matures, organizations would get better at managing fraud, but we believe that CEOs needs to strategize to increase their organization pace in identifying and mitigating frauds. While it may not be possible in the immediate future to iron out frauds completely, the goal is to reduce the scale and frequency of frauds. We believe if CEOs pursue their four-step framework as a solution, then the companies would be much better placed to manage fraud and move towards the ideal goal of elimination. The current situation warrants a wake-up call for all the CEOs of the insurance companies so that they don't become prey to menace of fraud and abuse. Red flags should be developed to predict suspicious behavior across the insurance value chain. Tools like Fraudometer should be developed and used for predictive analytics. There should be mechanisms in place to ensure the revision and enhancement of the rules engine on an ongoing basis. So it is generally observed that the insurers shy away from initiating action against agents and brokers by complaining to ID about their wrongdoings or their involvement in unethical practices, as they are worried about the impact of such action on the amount of business flowing in from these entities. But in the longer run, it would have a very bad impact on the profitability of the company. Lately, insurers have realized it and have started taking punitive action against the agents by filing FIRs against them, but they are still found with waiting in course form of action against the brokers. So designated persons will have to keep the management abreast on regular intervals. For the finding and action taken reports in each case, this will enable the management to implement the policy in letter and spirit, which will act as a strong deterrent to the fraudsters planning to strike in the future. The management will have to appoint a person with experience, knowledge and exposure to the various frauds in the industry, who is hard integrity, passion and up to the date on the emerging fraudulent techniques adopted by the fraudsters and their geographical locations, whose job would be to remain agile, vigilant, diligent, proactive and efficient in building a robust team to oversee and manage the introduction and implementation of the fraud and abuse control policy at the micro level. Thank you. Thank you very much.